The Social Security Administration processes your Medicare premium automatically. They calculate your search charge automatically. They record your earnings automatically. Not one of those three automatic processes has a built-in step that flags when the number is wrong and suggests you call to fix it because fixing it costs the system money. The system was not designed to cost itself money on your behalf. That is why these three calls exist, and that is why nobody at SSA will ever be the one to suggest them. Right now, in 2026, an estimated 7.5 million Medicare recipients qualify for a program that eliminates their Part B premium entirely and pays their deductibles and co-pays on top of that. Most have never heard it exists. The Medicare card in their wallet gives no indication they are overpaying. The agency processing their premium has no financial reason to tell them. On top of that, Social Security earnings records contain errors at a rate the agency has acknowledged for decades. Each incorrect year reduces a monthly benefit by approximately $100 permanently. The record sits online for anyone to check, most people never do, and a Medicare surcharge that millions of retirees are paying right now is based on income from 2 years ago that no longer exists. Income they earned before they retired, before a spouse passed away, before a one-time property sale. The search charge is automatic. The appeal is optional. SSA processes it without explanation and waits for you to ask why. 3 phone calls fix all 3. One afternoon, no lawyer, no paperwork beyond what you already have at home. In this video, I'm going to walk you through each one, the number to dial, the exact words to say, and the dollar amounts these calls have returned to retirees who made them. Stay through call 3. SSA has the least incentive of all to tell you about that one. Before the first call, I want to tell you about a 69-year-old retired nurse in Memphis named Margaret. Margaret had been on Medicare for 4 years and collecting Social Security for 3. She paid her $185 Part B premium every month without question. She paid her annual deductible. She paid her co-pays every time she went to the doctor, which at 69 with a replaced knee and a thyroid condition she was managing was often. She had built her retirement budget around those numbers the same way she had built her working life around her income, carefully without complaint. Last fall, Margaret was sitting in her doctor's waiting room when the woman next to her mentioned she had not paid a Medicare premium in 2 years. Margaret assumed the woman had a different kind of coverage. She asked. The woman told her about something called the Medicare Savings Program and gave her the number for the state Medicaid office. Margaret went to her car. She sat in the parking lot and did the math on her phone. $185 a month for 48 months. She had paid $8,880 in premiums, plus deductibles, plus co-pays, on a program that was supposed to cover all of it if her income fell within a certain range. Her income fell within the range. It had fallen within the range since the day she enrolled. She drove home and made 3 phone calls that week. By the time her next Social Security statement arrived, her monthly income was $570 higher permanently every month for the rest of her retirement. Not from a lawsuit, not from a government program that opened up from 3 calls that took less than 2 hours combined. Calls she could have made the day she turned 65. Calls nobody told her to make. Here is the structure underneath all of it. 3 separate government systems that were never designed to talk to each other and have no obligation to start. Medicare is run by the Centers for Medicare and Medicaid Services. The Medicare Savings Program that eliminates your premium is administered by your state Medicaid office. Those are 2 separate agencies. They operate separate databases. Medicare does not flag your account and alert your state office that you might qualify. Your state office does not scan Medicare enrollment records looking for eligible applicants. The Medicare Savings Program was created by Congress in 1988. It was specifically designed to help low-income seniors cover their Medicare costs. In the 38 years since it was created, enrollment outreach was never funded at the federal level. The assumption was that state Medicaid offices would find their own eligible seniors. Most states have never had the staffing or budget to do that systematically, so the program sits there $2,500 to $6,000 a year per qualifying senior. And the people it was designed to help pay their premiums every month without knowing they could apply. Your bank profits when you keep money in an account. Your Medicare plan profits when you pay your premium. Neither has a financial incentive to tell you about a program that eliminates what they collect from you. So the conversation never starts, and Social Security is a third separate system entirely. Your earnings record, your benefit calculation, and your IRMAA search charge all sit in the SSA database. None of it cross-references automatically against Medicare eligibility or state Medicaid records. 3 agencies, 3 databases, no bridge between them. One retiree sitting at home paying 3 separate bills that could have been lower or zero. Phone call number 1. The call SSA has no system to suggest and no incentive to start. This call is to Social Security. The number is 1-800-772-1213. When an agent answers, say this exactly. I want to request my complete earnings history and verify my record for any discrepancies year by year. Your Social Security benefit is calculated using your 35 highest earning years. Every year of earnings on your record came from a payroll report submitted by your employer. Before the year 2000, the majority of that processing was done manually. Employers submitted paper forms. SSA clerks entered the data. Numbers got transposed. Entire years got skipped. Part-year employment at companies that closed before filing their final reports never made it into the system. An IRS and SSA joint review found that approximately 3.3% of all Social Security wage entries contain errors. Applied to 70 million active beneficiaries, that is over 2 million people collecting less per month than they earned. Each incorrect year reduces your monthly benefit by approximately $100. On a 20-year retirement, 1 missing year of earnings cost you $24,000. 3 missing years cost $72,000. The correction is free. The documentation is a W-2, an old tax return, or a pay-up from the year in question. Documents that are easy to locate right now and harder to find the longer you wait. You can review your earnings history before you call by logging into ssa.gov and opening your My Social Security account. Pull up your statement. Compare the earnings listed for every year of your working life against whatever records you have. Any year that is blank or shows a number significantly lower than what you remember earning is worth a call. Margaret found 1 year missing entirely. 1994. 8 months at a printing company that closed the following year. The company's final payroll submission was never processed. 1 correction added $87 to her monthly benefit. Permanent. She will collect that $87 extra every single month for the rest of her life. A 72-year-old retired steelworker in Pittsburgh named Frank found 2 years missing, 1981 and 1983. His mill had switched payroll processing systems, and the transition records were never submitted correctly to SSA. Frank had no idea. He had been collecting Social Security for 7 years when he made this call. The correction added $180 per month to his benefit. He asked about retroactive payment for the years he had been underpaid. SSA processed a 6-month retroactive lump sum. $1,080 deposited within 4 weeks. Phone call number 2. This one does not even go to SSA, and that gap between agencies is exactly why 7.5 million eligible seniors have never made it. This call is to your state Medicaid office. To find the number for your state, call 1-800-MEDICARE, that is 1-800-633-4227, and ask them to connect you with your state's Medicare Savings Program office. When someone answers, say this: I want to apply for the Medicare Savings Program and find out which tier I qualify for. The Medicare Savings Program has 3 tiers. Each one eliminates a different portion of your Medicare costs. The income thresholds are higher than most people expect. The first tier is QMBB, Qualified Medicare Beneficiary. Monthly income under $1,350 as a single person, or $1,824 as a married couple. QMB covers your Part B premium completely. It covers your Part A premium if you pay one. It covers your annual deductible. It covers every copay and every co-insurance charge on every Medicare-covered service you receive. Nothing out of pocket. The state pays it directly to Medicare on your behalf. Annual savings range from $2,500 to $6,000 depending on how much Medicare-covered care you use in a year. QMB also does something most people do not know. Any provider who bills a QMB recipient directly for a Medicare-covered service is violating federal law. If a doctor's office sends you a bill for a copay you do not legally owe, you have the right to report that billing to Medicare and the provider can face penalties. The protection is real and it is enforced. The second tier is SLMBB, Specified Low-Income Medicare Beneficiary Income up to $1,616 per month single or $2,184 married. SLMBB covers your Part B premium. That is $22.90 every month eliminated, $2,434.80 per year returned to your income. The third tier is QI, qualifying individual income up to $1,816 per month single or $2,455 married, also covers your Part B premium completely. QI funding is first come, first serve for the year. Applications submitted earlier in the calendar year are processed before funding runs out. If you are within the QI income range, file as early in the year as possible. The Part B premium in 2026 is $22.90. It increased nearly 10% from last year. That increase consumed more than a quarter of Social Security's entire cost of living adjustment for 2026. If your income puts you within any of those three thresholds and you have not applied for the Medicare Savings Program, you paid that increase on a bill the state was supposed to be paying. The application is one form filed through your state Medicaid office. Takes about 15 minutes to complete. Margaret's total monthly income from Social Security and a small pension was $1,580. That put her above the QMBB threshold, but inside the SLMBB range. Her $200 and 2.90 Part B premium was, and 2.90 Part B premium was eliminated the month her enrollment processed. $2,434.80, $80 per year, back in her account every year. A 74-year-old retired letter carrier in Albuquerque named Robert had a different outcome. His income came in just under the QMBB threshold at $1,290 per month. His enrollment in QMBB eliminated not just his $22.90 premium, but his annual Part B deductible of $283 and every copay on every doctor visit and lab test he had for the year. Robert had been paying roughly $180 in copays per month on average due to ongoing treatment for diabetes and high blood pressure. His total annual savings came to just under $4,600. One form filed through the state Medicaid office, the same office Robert had driven past for 11 years on his mail route, without knowing it processed applications that could have helped him every single year since he enrolled in Medicare. Phone call number 3. This is the one SSA, profits from you never making. Every month you do not make this call is a month. The search charge keeps running. This call is back to Social Security. Same number 1-800-772-1213. When an agent answers, say this: I want to request the SSA 44 form to appeal my IRMA, a search charge based on a qualifying change in my income. IRMA stands for Income-Related Monthly Adjustment Amount. It is a surcharge added to your Part B premium when your income from 2 years ago exceeded certain thresholds. In 2026, those surcharges add $81.20 to $487 per month on top of the standard $22.90 premium. The highest income tier pays $689.90, $189.90 total for Part B alone. The search charge is calculated automatically using your most recent available tax return. Your 2026 search charge is based on your 2024 income. If something changed between 2024 and today, the search charge has not changed with it. It is still running on the old number. Here is who that catches without warning. You retired at the end of 2023 or in 2024. That final working year included a full salary. Your tax return showed higher income than your retirement income will ever show again. Medicare looked at that return and set your 2026 premium accordingly. You are now living on Social Security and savings and still paying a search charge calculated as if you are working. A spouse passed away. Your filing status changed from married to single. Your household income dropped significantly. The search charge did not adjust. You sold a property or a business in 2023 or 2024. One-time income never recurring. The transaction pushed your tax return into a higher bracket for that single year. Medicare picked up that number and has been charging you for it every month since. The SSA 44 form exists specifically for situations like these: retirement, death of a spouse, divorce, reduction in work hours, loss of a pension. Any qualifying life-changing event allows you to document your current income, file the form, and have your search charge recalculated based on what you earn now rather than what you earned 2 years ago. A 67-year-old retired teacher in Phoenix named Helen sold an investment property in 2022 for a significant gain. Her 2022 tax return reflected income far above what she earned from teaching or would earn in retirement. Her 2024 Medicare premium was hit with a $487 monthly IRMA surcharge. She filed the SSA 44 with documentation of her current retirement income. The search charge was eliminated entirely, $5,844 per year returned. Margaret filed the SSA 44 for a property her late husband had sold 2 years before he passed. That one-time sale had inflated their final joint tax return. She had been paying a $298 monthly search charge in 2026 based entirely on income that had not existed for 2 years. The SSA 44 removed it. $3,576 per year back in her account. Here is the late reframe, and this is the one worth writing down. The Part B premium went from $185 in 2025 to $200 and $2.90 in 2026, a 10% zero in 2026, a 10% increase in 1 year. Social Security's COLA for 2026 was 2.5%. That means before any retiree spent a single dollar on groceries, utilities, or medication, more than a quarter of their raise was already gone to the Medicare increase. The raise that was supposed to help them keep up with rising costs went directly to the agency billing them for coverage. The 7.5 million seniors who qualify for the Medicare Savings Program paid that full increase on a bill the state was supposed to be paying. The retirees paying IRMA surcharges on income they no longer earn paid their surcharge increase too. The retirees with errors in their earnings records collected their reduced benefit for another year without knowing the correction was available. All 3 categories, all 3 bills, all still running in the background because no agency has the obligation or the system to stop them on your behalf. 3 phone calls stops all 3. Here is the full picture. Call 1 to Social Security to verify your earnings record year by year. 1 missing year costs $100 per month for the rest of your retirement. Call 2 to your state Medicaid office to apply for the Medicare Savings Program. Income under $1,816 per month as a single person may qualify you to eliminate the $202.90 Part B premium entirely. Call 3 back to Social Security to request the SSA 44 form if your income dropped since the year your IRMA search charge was calculated. Retirement, death of a spouse, a one-time property sale, all qualifying events, all reversible with 1 form. Margaret made all 3 calls. She is collecting $570 more every single month. The calls took less than 2 hours. She made them in 1 week. Send this video to one retiree you know who has never checked their Social Security earnings record or question why their Medicare premium is the number it is. That one share might put hundreds back in their account every single month from 3 calls the SSA had every reason in the world to never suggest. That is what this channel is here to do. I will see you in the